This time around, we are joined by none other than Dewey Strickler of AgWatch Market Advisors to get his thought on how we're opening up our trading week. The markets are open here, Dewey. Let's take a first look at what's going on with the corn market. Had a little weaker tone overnight, and that's carrying through into the daytime session. However, it has bounced a little bit off of its earlier evening lows. And you currently have July corn trading 4.5 lower, now 4 3/4 lower. We're at $7.80 per bushel. And we have new crop December down 9.5 cents right now at $7.11 1/4. So the nearbys are gaining on those deferred contracts a little bit today. Well, let's look at soybeans. How are they doing? A lot of pressure here. July down 20 3/4 at $16.01 1/4. And November soybeans down 22 at $14.48 3/4. I'm a little bit confused here, Dewey. If the weather is beneficial so that farmers can get in the field and get the corn planted, and that's pressuring the corn market, wouldn't that be bullish for the soybeans? If you're going to have more corn acres, the logic is you would have fewer soybean acres.
Well, that's the logic, but as I mentioned here, I think on your last broadcast around a week ago, when you look at the large institutional investors, the index funds and so forth, since about the first part of April here, Marlon, they have been liquidating or lightening up their longs, not only in corn and soybeans, but also in wheat. So fundamentally, I think that the soybeans have the weakest fundamentals of all the grains here, but you're starting to see some liquidation of the big money are taking are pulling money off the top of the table here.
Now, I believe I saw late last week that Argentina was already halfway done with their soybean harvest. Is that right?
That's about right, yes.
Okay, now here in the U.S., you probably fully expect to see pretty good planting progress this afternoon, right?
I think we'll see this afternoon. I think the trade may be looking a little further ahead, let's say next week, because we've got several days of open weather here in which we will see planting be expedited.
All right, let's take a look at how we're opening up then in our wheat trade this morning. Now, that's a whole different story where we had pressure in corn and soybeans overnight. The wheat market was firmer. And let's take a look first at Chicago wheat in July. Well, we're 5 3/4 higher today at 11.14 1/4, but that's only about 2 cents from our low of the evening trade. So it's one of those good news, bad news stories here. We're much closer to the evening low than we are the high. July KC wheat, 12 1/4 higher at 11.82 3/4. That's only about a penny and a half from our low of the evening trade, even though we're up 12 cents. And spring wheat in Minneapolis, July 19 3/4 higher at 12.28 1/2. So what's going on in this wheat trade today? It seems to be all over the place.
Mostly what you're looking at, Marlon, is that conditions remain poor in the southern plains past 2 weeks. Crop's been rated about 27% good to excellent. We've got some issues going on with India, their crop there, also with France. So you lump all that together, wheat is strongest here today and has been for the past couple of sessions.
Okay, Dewey, we'll take a look at our livestock trade when we come back in just a moment. Don't go anywhere. We'll have more after this. Well, we're back with Dewey Strickler, and let's take a look at how we're going to be opening up today in our livestock trade to start out the week. So let's go to live cattle. And first of all, on live cattle, we have the June contract $1.60 lower this morning at 131.15. Even with a lower corn market, we have the cattle under a lot of pressure. August down $2 now at 133.35. That's only one tick from our low of the opening range. And if we look at the feeder cattle market here, we have the August contract. We'll start with that one. It's at 172.60, which is down $2.10. So this is intriguing here, Dewey. 172.52 as it continues to drop as we're watching it. Had a high already at the open of 175.30, and we're off of that nearly $3 already. What in the world tripped up the cattle market here right at the open?
Well, a couple of things. First of all, not only in the cattle, but in all the meats, you're looking at the funds have been reducing their long positions. They've been doing this for the past couple of weeks. So I think that's part of it too. Second, you're looking at the cutout values are down at a period of time when cutouts should be higher. from a seasonal point of view. And long story short, you're looking at consumers with the high energy costs and so forth. They have a lighter wallet, and that's basically it.
Well, that's one way to put it. Choice cuts, we have the visual on the screen. 254.44 on the Friday afternoon update from USDA. That would be down 74 cents from the previous day. And selects were at 245.06. That was down 75 cents from the day before. So the choice at 254.44 compares to the week before when it was 260.78. So they continue to keep losing ground. We're roughly about $6 behind on a weekly basis. And let's take a look at the pork cutouts as well from last Friday. There you had the pork carcasses down $1.57. We were at 104.70. And you had the belly market actually down $15.21. It finished up last week at 150.96. Let's take a look at the lean hog futures this morning and see how they're doing. With the cattle under a lot of pressure on the lean hogs, we actually have just about the identical type of pattern. We have the May lean hogs down $1.32. Look at June down $2.02 right now at 102.07, and July at $2.50. It's at 104.55. We've talked for a long time, Dewey, about that head and shoulders pattern on the hogs, and we wondered just how much pressure that would put on the market here. So it looks like June is kind of getting in that neighborhood of testing that $100 level. Do you think it's going to take it out?
Very well could. I wouldn't be surprised if we don't see that here, based on what we just talked about with the economy and so forth.
So Shanghai is under lockdown for, I think it's week number 6 now, and it sounds like, if anything, maybe the shutdowns are getting even more extreme. That's going to be something that bears watching when it comes on demand. I haven't seen China buying much of any pork here lately, so it could be a big story moving forward as they continue to stay locked down. Dewey, thanks for the information today. Always good to hear from you. Dewey Strickler of AgWatch Market Advisors. So we're up and running, Janet. We'll keep tabs on it through the day.